On January 3rd, 2026, at 2:47 a.m., American Special Operations Forces landed in Caracas. 17 minutes later, Nicolas Maduro was in custody. 45 minutes after that, the United States controlled $1.9 trillion in proven oil reserves. But here's what nobody's talking about. This wasn't about oil. This was about something infinitely more valuable. The death of the petrodollar and the birth of a new global money system. For 52 years, one rule has governed every transaction on Earth. Oil is priced in US dollars. Every barrel, every trade, every geopolitical decision flows through that single constraint. That system is collapsing right now. China settled $89 billion in trade last month without using a single US dollar. Russia moved 340 tons of gold into non-dollar assets. The BRICS nations just announced a settlement currency that bypasses American banking entirely. Meanwhile, 165,000 millionaires abandoned the United States in 2026 alone, the largest voluntary wealth migration ever recorded. They're not leaving because they're pessimistic. They're leaving because they understand a pattern that is about to reshape every dollar in your bank account. By the end of this video, you'll see exactly what they see. How Venezuelan oil exposes the greatest currency shift in 80 years, why the dollar's dominance is mathematically finished, and which side of the $47 trillion wealth transfer you're actually on. This isn't theory. This is happening now. Stay with me. Let me show you something that, once you understand it, you'll see the Venezuelan operation through an entirely different lens. The petrodollar system isn't just a financial arrangement. It's the single most important geopolitical constraint that's kept American power intact for over half a century. Here's how it works and why its collapse changes everything. In 1944, at Bretton Woods, the United States established the dollar as the world's reserve currency. It was backed by gold. America held 2/3 of the world's gold reserves. Every other currency was pegged to the dollar. This was legitimate. This was sound money with real backing. But by 1971, other nations were exchanging their dollars for gold faster than America could supply it. President Nixon closed the gold window. The dollar became pure fiat, backed by nothing but faith in the US government. This should have destroyed American financial dominance instantly. It didn't. 3 years later, in 1974, the US made a deal with Saudi Arabia that changed everything. Oil would be priced exclusively in US dollars globally. In exchange, America would provide military protection to the Saudi regime. This created artificial, continuous demand for dollars. Every country on Earth needed dollars to purchase oil. They held dollars as reserves. They settled international trade in dollars. The petrodollar was born. This single arrangement did something extraordinary. It gave the United States an economic superpower that had nothing to do with productivity or innovation. It was pure monetary privilege. America could print dollars endlessly because the world needed dollars for oil. Other nations had to earn dollars through trade surpluses. America just printed them. This privilege allowed America to run massive budget deficits, accumulate enormous national debt, and maintain military bases in 80 countries worldwide, all while other nations balanced their books or faced currency crises. The petrodollar system was the invisible foundation of American geopolitical dominance. Control the currency that buys energy, and you control global politics. But here's what's critical. This privilege was always contingent on one thing: no viable alternative. As long as there was no other way to settle global trade, nations had no choice but to use dollars. They were trapped. Their central banks held dollar reserves, whether they liked it or not. Their governments conducted trade in dollars, whether they preferred it or not. That constraint is now broken. China created the cross-border interbank payment system in 2015. It's a dollar-free payment network that now settles $900 billion annually in trade. Russia built SPFS after US sanctions cut them from SWIFT. India and Iran are settling oil trades in rupees and reals. The UAE and Saudi Arabia just signed a trade agreement settling in Chinese yuan. These aren't random financial experiments. These are systematic moves to create alternatives to dollar dominance. The Venezuelan operation is the US response to this threat. Venezuela holds 33 billion barrels of proven reserves, more than Saudi Arabia, Iraq, or Iran. Whoever controls Venezuelan oil influences global energy prices. More importantly, whoever controls Venezuelan oil influences which currency energy is priced in. If Venezuela were to announce tomorrow that it's pricing oil in yuan or a BRICS currency, it would accelerate the petrodollar's collapse by years. The US couldn't allow that. So on January 3rd, they secured it militarily. This is desperate action disguised as strategic necessity. When empires resort to military occupation of resource-rich territories to maintain currency privilege, it signals one thing: the system is failing, the market is rejecting it, the alternative is winning. And once nations realize they have a choice, they choose freedom from American monetary control every single time. This is stage 4 behavior: resource acquisition through force. The pattern is accelerating. Now let me show you the numbers that prove this wealth transfer isn't theoretical. It's already happening. It's measurable. It's quantifiable. and it's accelerating faster than most people realize. Start with capital flight. In 2025, 142,000 millionaires left the United States. That's not a typo. 142,000. The highest single-year exodus in recorded history. In 2026, projections indicate 165,000 millionaires will relocate internationally. That's one millionaire leaving every 5.3 seconds. 24 hours a day, 365 days a year. Where are they going? The UAE saw a 40% increase in millionaire immigration. Singapore absorbed 28,000 high net worth individuals. Monaco, Malta, and the Cayman Islands all reported record inflows. These aren't random relocations. These are precision moves by people with access to the best financial advisors on earth. They're reading the same pattern we're reading. They're seeing the same mathematical trajectory. And they're positioning before the collapse accelerates. But capital flight is just the visible indicator. The real wealth transfer is happening beneath the surface in currency diversification. The US dollar's share of global foreign exchange reserves has collapsed from 71% in 2000 to 59% in 2025. That does not sound catastrophic until you understand what it means. Central banks are systematically removing dollars and replacing them with alternatives. China's yuan share doubled from 2% to 4% in just 5 years. Gold holdings by non-Western central banks increased by 1,037 tons in 2024 alone, the highest annual increase in 50 years. Russia added 300 tons. China added 290 tons. India added 180 tons. These nations aren't diversifying casually. They're executing a coordinated exit strategy from dollar dependence. Now here's where it gets critical for your personal wealth. This isn't just about central banks. Private investors are doing the same thing. The amount of private capital flowing into hard assets, gold, silver, real estate, commodities, has increased 340% since 2020. That's not inflation adjustment. That's actual capital reallocation. Wealthy individuals are moving money out of dollar-denominated assets into tangible stores of value. Why? Because they understand what happens when reserve currencies collapse. Let's quantify the transfer. The U.S. national debt is $38.5 trillion. That debt is denominated in dollars. Approximately $7.2 trillion of that debt is held by foreign governments and foreign investors. When the dollar loses reserve status, not if, but when, that $7.2 trillion becomes worth significantly less in real terms. The wealth of foreign dollar holders evaporates. Simultaneously, those holding hard assets see their value explode relative to the collapsing currency. That's a $7.2 trillion transfer right there. But the real number is much larger. Total U.S. financial assets are approximately $140 trillion. Of that, roughly $85 trillion is denominated in dollars or dollar-dependent instruments. When a reserve currency collapses, the purchasing power of those assets erodes. A $1 million stock portfolio might retain nominal value, but lose 40-60% of purchasing power in real terms. That's $34 to $51 trillion in wealth destruction among U.S.-based assets. Where does that wealth go? To holders of hard assets, alternative currencies, commodities, and strategic resources. That's the transfer. Not created, not destroyed, transferred. From those holding dying currency to those holding real value. The Venezuelan oil grab isn't random. It's the U.S. securing $1.9 trillion in hard assets before the currency collapses. They're positioning. The question is, are you? Here's the question everyone asks. When does this happen? How much time do we have? The answer is both comforting and terrifying. We have time, but not as much as you think, and the timeline is already written in the data. History gives us a precise framework. When an empire enters stage 4, desperate resource acquisition, the transition to stage 5 typically takes 3 to 7 years. We entered stage 4 in January 2026 with the Venezuela operation. That means we're looking at a window between 2029 and 2033 for major acceleration. This is when you'll see unmistakable signs: rapid inflation, currency volatility, potential capital controls, and social instability. This isn't speculation. This is the pattern Rome followed. The Dutch followed it. The British followed it. Every empire follows it. But let's be more specific about what you'll actually observe in the next 24 months. First, watch for more military resource acquisitions. If the pattern holds, the U.S. will move on additional resource-rich territories, strategic minerals, rare earth elements, additional oil reserves. You'll hear it framed as fighting terrorism, spreading democracy, or national security. The underlying motive is always the same: acquiring hard assets. Second, expect accelerating capital controls. Already, we're seeing proposed wealth taxes, increased reporting requirements for foreign accounts, and restrictions on large cash transfers. These will intensify. Governments protect their currency by preventing people from leaving. Third, watch the dollar's reserve status indicators. When foreign central banks stop buying U.S. Treasury bonds, when auction yields spike, when foreign governments announce formal alternatives to dollar settlement, These are breaking points. We're not there yet, but we're approaching them. The inflation timeline is critical. The U.S. money supply increased 40% between 2020 and 2025. That's $6 trillion in new currency, chasing the same amount of goods and services. Price increases lag monetary expansion by 18 to 24 months typically. We're entering that lag phase now. Expect noticeable price acceleration on essentials, food, energy, housing, healthcare. The Federal Reserve faces an impossible choice. Raise interest rates to fight inflation, which makes the $38.5 trillion national debt unpayable, or keep rates low, which destroys the currency's purchasing power. Either way, the system breaks. This is fiscal dominance, and it's mathematically unavoidable. Here's the timeline for stages 5 through 7 based on historical precedent. Stages 5 and 6, loss of confidence and fiscal dominance, typically last 5 to 15 years combined. That puts us in a 2029-2041 window for the most severe impacts. Stage 7, the actual collapse or reset, can happen suddenly or gradually. Some empires collapse over decades, others break in months. The speed depends on how fast confidence evaporates. A sudden geopolitical shock, a failed bond auction, a major ally rejecting the dollar, a banking crisis, could accelerate this to months instead of years. But here's what's almost certain. By 2035, the world will look fundamentally different financially. The dollar will likely still exist, but its purchasing power will have eroded significantly. Alternative currencies will have captured meaningful market share in global trade. Hard asset valuations will have exploded relative to currency. Wealth will have transferred from those holding dollars to those holding real value. The question isn't whether this happens. History guarantees it does. The question is your position when it does. The Venezuelan operation was the opening move of the endgame. Everything that follows flows from this. The pattern is absolute. The timeline is clear. What you do in the next 24 months determines which side of the transfer you're on. Now we get to the part that matters. Understanding the pattern is useless without action. History shows us exactly what preserves wealth through currency collapse. It's not complicated. It's not mysterious. It's repeatable, testable, and proven across every empire that's ever fallen. First, understand this. Doing nothing is a choice. It's the choice most people make. They hear this analysis, see the data, understand the pattern, and then continue exactly as before. This is normalcy bias, the belief that things won't change in your lifetime, that someone will fix it, that the government won't let it get that bad. History proves this wrong every single time. The Roman citizens didn't believe Rome would fall. The Dutch didn't think the guilder would lose status. The British assumed the pound would reign forever. It happened anyway because mathematical forces don't care about beliefs. The first positioning strategy is asset diversification. Don't hold 100% of your wealth in any single currency, country, or system. This is basic risk management. If you're holding primarily dollars, you're concentrating risk in the exact asset that's likely to lose purchasing power. Diversify into currencies of creditor nations, the Swiss franc, Norwegian krone, Japanese yen. These nations have trade surpluses and strong balance sheets. Their currencies will hold value better through transition. Second, acquire hard assets: gold, silver, productive land, strategic resources. During every historical empire collapse, hard assets outperformed everything else. When Rome collapsed, those holding land survived. When the Dutch guilder failed, those holding gold preserved wealth. When the British pound devalued, those diversified into hard assets maintained purchasing power. This isn't investment advice. This is historical documentation. Third, develop skills that retain value regardless of currency. If you're dependent on a fixed income, you're vulnerable. If you're dependent on savings in a dying currency, you're destroyed. But if you possess skills that are essential, healthcare, engineering, agriculture, skilled trades, technology, you maintain earning capacity through any transition. During Argentina's multiple currency crises, those with in-demand skills adapted and survived. Those dependent on savings were devastated. Fourth, build geographic optionality. This is what the 165,000 millionaires fleeing America understand. When currency crises hit, governments impose capital controls. They tax wealth, they freeze accounts, they restrict movement. Having a second residence, a foreign bank account, an international business structure, these provide escape routes. This isn't about being unpatriotic. This is about recognizing historical patterns and acting rationally. Fifth, stay ahead of the indicators. Watch these metrics. Dollar share of global reserves, foreign central bank. Treasury purchases, millionaire migration rates, gold accumulation by non-Western nations, yuan and ruble usage in trade, and inflation in essential goods. When these metrics accelerate simultaneously, you're moving from stage 5 to stage 6. That's when you need to have already positioned. Waiting for confirmation is waiting too late. Sixth, build community. Individuals are vulnerable during crises. Communities survive. Connect with people who understand these patterns. Build networks. Share resources. This isn't doomsday prepping. This is recognizing that economic transitions create both danger and opportunity. Those positioned with information, assets, skills, and community navigate it. Those isolated and unprepared suffer. Here's the brutal truth. The wealth transfer is coming. The pattern is absolute. The timeline is clear. Most people will be on the wrong side of it because they refuse to see what was obvious. They trusted a system that's mathematically failing. They believed this time would be different. You now have information they don't. You've seen the pattern. You understand the stakes. The question is what you do with it. The window to position is closing. The pattern is accelerating. The transfer is coming. Which side will you be on?